Let's trade it now with Tim Bigham, options strategist at Pilot AI. Very good morning to you, Tim. How are you approaching your example trade for CRWV?
Yeah, absolutely. I mean, last week we talked CRWV as well. With the stock about 10 points lower, I kind of talked about doing a iron condor, selling out of the money call spread and put spread both that expire in October. I think after the recent news, it kind of maybe doesn't have the stock rip higher from here, but maybe puts kind of a higher floor in the shares here. Certainly the backstopping and the investments by the big boys, the NVIDIAs and Microsofts, into these smaller companies who are their, in essence, customers as well, is a little bit kind of a circle jerk, back and forth here, where they're investing in their customer invests in them. We'll see how long this kind of game goes on. But I think short term, certainly CRWV probably will not have any big downside here. Upside probably muted by simply the fact that it's run so far so fast here. So I'm using the old kind of levels where it found support around 115, selling the October again, traditional 17th 115 put, buying the 110 put, bringing in right around a buck net credit here. So I think as a new trader, anyone who did the iron condor last week can roll that up, bring in more credit. But I think CRWV and these AI names that have run recently so red hot probably will struggle to head appreciably higher. We're seeing the call skew start to outpace the put skew as well, where calls are trading at a higher IV than similar out of the money puts. That's normally a sign in the options market too that maybe the upside speculation has gotten a little over the skis here and may have to settle down.
Okay, that's a good look at CRWV and an example trade for that one, Tim. Just want to get your overall thoughts on the market today. We started higher. We're losing some altitude here on the S&P 500 and also the NASDAQ. So a bit of steam coming out of major indices. We've got a bit of a Mag 7 drag happening here. Tech, consumer discretionary and staples are under pressure. Just wondering what you sort of put that all down to right now.
I think, almost about time, I hate to say, we have not had any meaningful pullback really since the Liberation Day lows back in April here. Stocks continue to just head higher. And yeah, interest rates are going to head lower, but not, dramatically so. Valuations, as we've talked about for a long time, getting absolutely stretched now. So I think you're starting to see valuations maybe come into play here. How much can these big kind of AI mega cap names, the NVIDIAs and Microsofts of the world, with the money they're spending, how much will they be able to monetize of that? So I think there's finally maybe a little look forward and saying maybe it's not going to be clear sailing from here, maybe taking a little off the table at very nice prices with stocks at all-time highs makes a lot of sense.
Okay, a good look at the market there. Thank you so much for that, Tim Bigham. Always appreciate your time.
You bet.
That is Tim, the options strategist at Pilot AI.